The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, a lot is being said about the incoming U.S. President Donald Trump's proposed trade and economic policies, as he is set to return to the White House on January 20th. But do his proposed policies and tariff threats impact tequila markets? Well, for one, Trump is proposing a 25% tariff on Mexican imports, including tequila. This understandably is a rising concern for investors in the burgeoning tequila market. So what should you take note of before investing in the tequila market? Well, to find out more, joining me now is Samuel Gordon, who's the CEO of GORDON PWC. Samuel, welcome back to the show.
Pleasure to be here.
Pleasure to have you on once again. Samuel, just to kickstart our interview here, how do you think the renewed U.S. trade policies under Trump's administration could impact the tequila market, particularly for investors looking into casks of tequila?
So for me, it's very unlikely that they will impose the tariffs on tequila. That is primarily because they cannot bring tequila production to the U.S., unlike other key trade industries such as automobiles and auto parts. And they also can't offer a direct alternative to tequila, as is the case with whiskey, for example. That being said, there obviously is still a risk, as Trump has stated, a general 25% tariff on Mexican import. That's primarily due to the trade deficit that Mexico currently runs with the US. If you look at the two potential outcomes, so the likely outcome for me is that they don't touch tequila specifically, based on what I mentioned before. If they don't, then what we can still expect in the tequila market is the same continued growth in the US, which currently accounts for about 70% of tequila's global sales every year, which would be positive for tequila investors. If he does place tariffs on tequila, then we should still expect limited damages. And this is really due to tequila's premium appeal and the ongoing globalization of the market. So for investors aging their own casks of tequila, really the outlook at this point still couldn't be brighter, because you've got that premiumization that's continuing to drive the market's growth and ultimately demand for aged tequilas like Extra Añejo, for example.
I see. Well, given the speculation about potential tariffs on Mexican imports, then, how significant is the risk for investors in tequila casks, and how might they mitigate these risks?
The main risk really is that tequila historically has had such a heavy reliance on the US market. So any Trump tariffs could push up prices for American consumers and potentially slow demand. What really pushes up the value of an investor's cask is not just the increased quality of their aged tequila, but it's also the inherent scarcity of it, Hongbin. So in theory, if demand slows, this could lead to a surplus of supply, and again, in theory, drop price. That being said, so for investors in tequila casks, they are really targeting the premium section of the market, because they're reselling aged tequilas like Extra Añejo to the brands within that premium segment. So when you're asking about mitigating risks, that's really how we help investors mitigate their risks, because the consumers within that premium segment are far less price sensitive. So even if tequila prices rise or inflation in the US rises, this segment of the market is still extremely well insulated.
I see. Then with tequila markets growing in regions like Europe and Asia Pacific, how does this diversification influence the stability of investing in tequila casks?
If we're talking in the context of potential US trade tariffs being imposed, then it's extremely important on the demand side. So if we were to rewind, let's say 10 or 20 years ago, premium aged tequila, so the Extra Añejos, the Añejo products that we've spoken about, they were still relatively unheard of outside the US. So any slow in demand within the US due to the trade tariffs would have been significant. If you fast forward to today, and again, the US still holds a significant percentage of the market. It's around 70% of the global sales. But it's the key markets like Canada, the UK, Europe, and Asia Pacific that are now growing at rates of 8 to 12% per annum. So, in the long term, a slow in demand in the US is far less of a risk to investors in the market as long as these other markets continue to drive that growth.
I see. Well, how could then potential inflation and reduced consumer spending in the U.S. impact the overall tequila industry? And what does that mean for long-term cask investors?
My thoughts generally are that Trump's tariffs are going to be inflationary, especially for the U.S. consumers in the short term. Obviously, if wages don't keep up with the higher inflation rates, then American consumers are going to have less disposable income to spend on discretionary or non-essentials like tequila. So again, investors are advised generally to invest in the premium segments because these consumers typically do well in any economy, which keeps the demand growing for the premium aged tequilas like the Extra Añejo. So, we don't have a crystal ball, but what we can safely say is that investors in premium tequila should be well insulated during times of rising inflation.
I see. Well, considering the importance of Mexico's denomination of origin for tequila production, then, how secure is the supply chain for investors in casks of tequila, especially in light of potential disruptions, Samuel?
This is really a key point as to why we don't believe the trade tariffs will be implemented on the tequila market because, as mentioned previously, the US cannot bring production into the US and there's therefore little or no economic benefit to them. Tequila, currently Hongbin, is the fastest growing spirit category in the world and really now is America's number one spirit, even above whiskey, for example. And again, there is no alternative that the US can offer directly to its consumers either. Unlike whiskey, with the potential single malt tariffs that Trump is looking to place on exports of single malt from the UK to the US, America has a bourbon industry. It even now has an American single malt industry. So there's a direct alternative that they can offer their consumers there. So tequila is fully produced in Mexico, so all the way from the raw materials to the entire production process, all the way through to bottling. That full production cycle must occur within 5 very small regions in Mexico. So in terms of supply chain disruptions, we really don't foresee anything else pushing up production costs outside of the potential import tariffs imposed by the US.
I see. Well, how does investing in cask of tequila then compare to other alternative investments like wine or whiskey, particularly in terms of resilience to economic policies and inflation?
Really, they're the same in terms of their inflation benefits. So they're providing investors with a strong inflation hedge. Tequila's main exposure, again, is the dominance of the US market for its global sales. So other markets like in whiskey, as you mentioned, they are far more diversified in terms of their market exposure, but of course they have other challenges. Overall, the 3 markets you've mentioned, tequila, whiskey, wine, they are extremely resilient to economic challenges like rising inflation or interest rates. And that's unlike other more traditional asset classes, for example, so stocks, property, bonds. Really, the prices for the casks within any of these 3 categories, so tequila, wine, whiskey, the prices are determined by the production of the new spirits, the aging process that then takes place, and then the demand for the aged products rather than the wider economic events.
Okay. So with affluent consumers driving the demand for high-end tequila, how do trends in premiumization affect the value appreciation of tequila casks over time?
Significantly.
Mm-hmm.
So the tequila market is set to surge to 42.5 billion by 2032. And again, much of this growth is being fueled by that premiumization trend. So the demand for high quality aged tequilas. It is the demand for those type of tequilas, again, the añejo tequilas, the extra añejo tequilas, that is driving the market's growth. So for investors in casks, this is extremely positive because it means that owning assets are inherently scarce and have a surging demand.
Right. And before we let you go here, Samuel, for someone interested in investing in casks of tequila, what are the key factors they should consider, and how can they navigate potential challenges like regulatory changes or market volatility?
So in terms of the key factors to consider, I would always look at three key factors. So risks, rewards / objectives, and tax implications. So in terms of risks, you can really typically look at three key risks. You've got the asset risk during the term. You're owning a cask of tequila, which is stored in Mexico at the distillery's bonded warehouse. That obviously comes with risks. However, those risks for the investors are mitigated because of the insurance policy placed on each cask. You've, of course, got the market risk as well. As with any asset class, should, for example, demand for tequila drop, then in theory prices could drop as well. And then liquidity. It's not like the stock market, for example, where you've got a recognized secondary market. It is a less liquid asset, and these are risks that investors should always consider. In terms of rewards or objectives, if you're comparing it to something like whiskey or wine that are typically longer term investments, tequila is different. It's a shorter term investment. Returns can be different. Our analysis suggests higher within a tequila market compared to similar asset classes. So an investor should really understand how this could fit into their overall portfolio. And in terms of tax implications as well, for example, our UK investors, they are not liable to pay capital gains tax on any profits of the investment. And that's because the asset, like a whiskey cask, is classed as a wasting asset, which would exempt it from capital gains tax. This might be the case for other investors in different parts of the world, but it's something that we would advise them always to speak with their tax advisor, anybody who deals with their taxes, to be certain. In terms of market volatility, for example, like you mentioned, really, we don't see volatility in cask prices. So one of the big benefits of cask investments is you're profiting from that natural aging process. So the returns that investors make are made as the tequila ages over with tequila, that 3-year term. And this really provides a stable asset class for investors.
I see. Well, thank you so much, Samuel, for your time and your insights today.
An absolute pleasure, Hongbin. Thank you for having me back.
Thank you. That was Samuel Gordon, who's the CEO of Gordon PWC. This has been The Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.